first half of the year has been very solid. Pre-tax profit is 5.1 million, and that's in line with our expectation. We knew that we wouldn't have an Easter this year that we had in the comparable period last year. We were opening new stores which were loss-making when they first opened, and as it transpired, the foreign currency was a little bit tougher because of the staycation summer and the fantastic weather that we had here, but we've offset that with some very good performance now of jewellery retailing and our pawnbroking, and a good solid performance in our gold buying segment. So on the whole, a solid 6 months. So in terms of that 5.1 million of pre-tax profit, we still have the opportunity to continue our growth and more stores, our investment in online, and to increase the dividend and have a progressive dividend policy. So we've increased the dividend by 0.2p, which is 9%. So the segments have performed very well in the first 6 months. I mean, I talked about foreign currency being slightly down. We actually exchanged 315 million, and that's 3% down in volume terms. Margin is only 2% down, and that's because we've got local pricing strategies, and that has worked. So the retail jewellery part of the business has performed very strongly. We are 27% up in revenue, we're 23% up in gross profit. So we have invested in the mix of stock that's in our windows, which is more new, coupled with our second-hand bargain jewellery. We've looked at the proposition of our stock and how it's displayed, and we've also looked at the stock levels that are in our stores. So gross profit is up 23%. It's the mix of the new and the second-hand and the growth of the revenue. The margin overall has fallen 2% to 52%, and that's really just the more new jewelleries at a lower margin than the second-hand jewellery. So on the whole, a very good performance. Pawnbroking, loan book up 6%. Some of that is to do with a shift in the term going from 5 to 6 months, but the income is up 5%, and again a solid performance from pawnbroking. Our gold buying precious metals, on a like-for-like basis, the weight of the gold that we've bought across our estate has been very stable, and the growth that we're seeing, the 6% growth that we're seeing in income, is really coming through from the new stores. So on the whole, all core segments, we're very happy with the way that we've performed. The growth strategy that we have is working. The strategy is to improve the performance of our core estate, open new stores, and develop our online offering. So the first key element is the core stores that we already have. Now that's improving what we do. So we've got the improvements in retail, improvements in pawnbroking, and the solid proposition that we have for our foreign currency. So that's how we're improving our core estate, as well as relocating some stores that are in the wrong position in a town because the town centre might have shifted, or because our old model was more suburban and now it's more retail and footfall driven for the jewellery and the foreign currency. So we relocated 2 stores in the first half of the year, and we're expecting to relocate to 4 stores in the second half of the year. The next leg of our strategic growth is coming from our new stores. So we opened 4 stores in the back end of last year, we've opened 4 stores in this period, we've actually opened 4 stores after the period has ended in October and November. So we've got good momentum in opening in our new stores. Now the new stores have performed ahead of expectation, but obviously that increase in store comes with an increase in overheads. So we've built up so that we can manage that growth. We've invested in our training team, invested in our area management structure. And then the third part of the growth strategy is online. We think it complements our branch estate because it helps our branch estate see all the products used using an iPad in store. We can show the customers all the different jewellery that we have online. But as an online on its own, it's its own income stream, it's its own branch, and that's grown 126% in revenue, and 50% of the customers who are using us online are coming from outside our branch catchment area. So that's positive, but it's still an area of growth, it's still an area of investment. We're still learning, we're still trialing things, and we've still got things to come through. So we've got positive expectations that we can grow our online business as well. As we start the second half of the year, we have still got the momentum in our jewellery retailing, obviously coming up to the very important Christmas period. We've come out of the peak summer season for foreign currency, and numbers are normalising, if you like, into where we would expect them to be. So we've started the second half of the year in a positive vein. Key Christmas period coming up. We have every confidence that we can deliver our year-end profit before tax expectations.